Can I have a breakfast item from your menu for lunch? Sure, sir. Any time of the day.
Isn't it great when you have this freedom? Like an exchange-traded fund lets you buy and sell in real time during market hours and take advantage of market volatility to help you improve your potential returns. Increase your appetite for potential wealth creation with ETF. Smart option choose karo. ETF karo. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Hello and welcome to this three-part webinar series on moneycontrol.com, which is brought to you by Mirae Asset Investment Managers. And this is called Decoding the World of ETFs. Now, why ETFs? So I actually pulled up the latest PIVA report from S&P Dow Jones Indices, and it shows the India scorecard for 2020, which reveals that over the 5-year period ending December 2019, almost 83% of large cap Indian equity funds and 78% of the ELSS funds, almost 41% of mid and small cap funds underperform their respective indices. So does this mean that the market for ETFs is ripe? Well, today we'll be talking about making ETFs more mutual. And joining me are Swaroop Mohanty, the CEO of Mirae Asset, and with him I have Siddharth Srivastav, the product head of the ETF format. Gentlemen, good afternoon, and thanks very much to both of you for joining in. Swaroop, my first question is to you. You heard the data that I read out, and of course, you've seen the market itself. Is ETF really the next big thing? Is the time right for it to take off in India?
Sumaira, thank you so much for doing this with us. Let's face it, in the investment world, arguably the most notable disruption has been the rise of ETFs. And in the last decade or so, where the AUMs have grown from say 5 trillion USD to 6.6 trillion USD, which is twice the size of the India's GDP. And over and above that, this is just a 3-decade-old product. ETFs is an investment product which is transparent, accessible to investors, and comes with a low cost. The tradability feature of the ETF also gives it an edge. This has given passive products, including ETFs, a great momentum globally. Today, index mutual funds and index ETFs both account to almost 19% of total net assets in US last year. And in last year, it's not very interesting to note that the AUM of passively managed equity actually surpassed the AUM of the actively managed funds, right? See, at the core of this adoption lies the simplicity of the product, and that makes it appealing. Today, with the help of ETFs, and investors sitting in the US can access the Indian markets and vice versa. Even the exotic ETFs are appealing to investors due to the transparent nature of its methodology and the low active risk. In India, several notable, developments have taken place in the last 5-6 years. The government uses ETFs as a preferred route for disinvestment, and that has increased the participation of retail investors too. In India, participation of retail investors has been suboptimal in the corporate bond. ETFs are being used very favorably by EPFO and private PFs for their exposure into ETF markets, or equity markets rather. And you brought up the debate of the shrinking alpha, and that is a debate which needs to be started now, and that's when the threshold of the ETF market starts globally, and we're not seeing an exception in India too.
All right, so Siddharth, comment on this, because the Indian market in many products is a little late to catch up. So what are the trends that you're seeing globally, and how is it compared to the Indian market in terms of ETFs?
So back in 1993, when S&P 500 ETF was first introduced, it was with the intent of trading a fund which tracks S&P 500 at a low cost, because actively managed funds were finding increasingly difficult to outperform the S&P 500 index, which we are now seeing in the Indian markets also. So now ETFs are being used for multiple things. For example, to take long-term strategic allocation, using a simple ETF like S&P 500 or a Nifty 50 in case of India, or a short-term tactical asset allocation using a sector ETF or a theme-based ETF. ETFs are also being used to create model portfolios depending on the risk profile of investors. So you can use different ETFs and construct a larger portfolio for an investor based on his or her requirement. Also now, during the rebalancing and the while the portfolio decision is being made, just to reduce the cash drag, the exposure is being taken via ETF to at least generate the market returns during this period. And also now, especially ETFs are being used to take exposure in emerging markets or a frontier markets by, especially if we are talking about the US investors. On the product side, in India, we are still catching up. We are still talking about plain vanilla ETFs like Nifty 50 or a Sensex. Global ETF market has evolved much more. There, the talk is right now around ESG-based ETF, where you use ESG-based ETF to do sustainable investing, or a smart beta based ETF, which uses factors like low volatility to give you a very focused exposure in that factor. Also now, debt-based ETFs are catching up, are getting a lot of traction globally. And it's interesting to note is that a lot of emerging themes and strategies. So like cannabis-based ETF or a cloud computing-based ETF is getting very high traction in the investment community, because using such exotic products, you can get a very transparent yet focused exposure in those emerging themes of the market. While coming to India, yes, we are still evolving, especially on the product side also, and in terms of how much retail participation is there in the industry. But if you compare where we were 5-6 years back, the entire market was being dominated by gold ETF. But now with government using ETF route for disinvestments, EPFO using ETF for exposure in equity market, there's a lot of traction which is being seen from the institutional side also and from the retail side also. So now we are seeing a lot of AMCs filing for sustainable products based on, let's say, ESG theme, or launching multi-factor based ETFs. So the product gamut is also increasing, and I think with that, the retail participation in the segment is also increasing quite well.
Okay, so just a note for our audience, Siddharth mentioned ESG. For those who don't know, these are the environment, social, governance norms that a lot of companies are now using to sort of categorize investments. And a lot of research, or at least recent research, goes to show that perhaps companies which are compliant to these norms could be better performers. People who are known for actively stock picking are also looking to have some exposure to ETFs. But to that, two questions for you. One, you spoke about the exotic ETF trends. Now, my simple point to that is that ETFs are a simple product, right? Why complicate a simple product? And second is that the kind of outperformance that indices are now doing, is that going to now be a structural trend?
So both very good questions. So when ETF first came into picture around 3 decades back in early 1990s, it was all about plain vanilla product, right? Giving exposure to broader market, like using S&P 500 or let's say a Nifty 50 in India. But see, ETF also gives you one very important thing, which is a transparent portfolio with a known methodology, which investor can assess to take exposure in various segments or theme of the market. So something, for example, let's say cloud computing is doing very well in US. Now, if someone wants to just take exposure in cloud computing companies, which are basically into that segment, he, rather than going for an active fund, can evaluate an ETF, which will tell you how the selection is being done, how the portfolio is being created, what has been the backtested performance, and the investor will be able to take that exposure, invest in that product, typically at a very low cost as compared to active funds. So that is why I think exotic products on the ETF sides are also getting a lot of traction, because at least you are getting that exposure at a low cost and with a known methodology and a transparent portfolio. So, what we suggest typically to an investor is that investor can evaluate forming their portfolio with some exposure to ETF, so that you do not risk the underperformance of your portfolio compared to benchmark that much, and you continue to get some beta exposure at a low cost in your portfolio, which will basically reduce the cost of your entire portfolio, as well as you will have some funds which are providing you that market returns.
Yeah, you raised a very valid point, Siddharth, because in India, and I'm sure both of you will remember that very, very famous ad that says "Kitta deti hai," right? So that's one of the key factors for India. It's sort of the most difficult question for you. I mean, Siddharth kicked it off, but I want you to take it forward. What is the place that an ETF has in an investor's portfolio? Where does it fit? Should it be part of the core portfolio?
Yeah, I agree, Sumera. This is the most important question when it comes to investing from an investor perspective. See, we feel ETFs are going to play a very crucial role in coming times for all investors' portfolios. There are various ways of doing this, but the key lies in avoiding the debate of active versus passive, or one should rather get into the thought process of what is good for one's portfolio. In that, there is a logical case for active plus passive investing, which Siddharth sort of alluded to in his discussion. I mean, just to take that point a little forward, say an active investor can still form his major portion of his portfolio in the active part of the side of the story, and can start allocating a bit to the ETF side as a satellite portfolio. What this does is it will reduce the risk of underperformance of the benchmark significantly. Hence, one can generate a better risk-reward outcome through this way. Apart from these, from a portfolio perspective, one cannot deny the buying and selling on exchange at intraday levels, which give the benefit to the ETFs. And Siddharth's been talking about taking beta exposures and in areas which you are unsure and selecting a fund. And one can take very focused yet low-cost exposure in various segments of the market. See, ETFs then form a multifunctional products, and these are across the segment and can cater to every need of mutual fund investor. I mean, here, Sumera, I'd like to ask you, since you interact the entire length and breadth of the market, what do you think ETFs can bring to the table for an investor?
Well, definitely, cost, performance would be two of the biggest plus factors, right? And of course, there's no fund manager risk, right? So I'm no longer relying on an individual. And, that SPIVA report, like if over the last 5 years, 83% of, large cap equity funds have not been able to outperform the index, it means, the investor's probability of actually connecting to a performing fund manager is down to a little over 15-16%. And even if I were to have connected to a fund manager who's performing, the big question is, would he do it regularly? And therefore, I definitely feel there is no doubt that ETFs have a place in terms of cost plus performance would definitely be the driving factors. But I'm not an advisor, so let me hand it back to the experts. So that if the ETF market is indeed to grow, how do you overcome these problems of liquidity, market makers? How will you deepen this market?
Yeah. So again, that is one question which we get a lot. So ETFs, first of all, can be traded in two ways. A large investor can come in a multiple of lot size, in a much larger lot size, directly to the asset management company, and there the liquidity is typically not a concern, because in the end we are creating fresh units, or if he is selling, we are exhausting the units for him. So there the liquidity depends upon what is the liquidity of the underlying stock. So in case of Nifty 50, we buy those 50 stocks or sell those 50 stocks. So for large investors, typically that is not a concern. A concern comes, as you rightly points out, when the trading is happening on the exchange. and there are several other factors come into play. And you are very rightly to point out that we are still trying to grow more retail participation, grow more exchange trading in ETFs. But right now, it's around 280 crores on a daily basis. If I put a figure to it, and it has grown maybe by 10 to 13% in last 1 year. So see, on the exchange, what happens differently as compared to stock? You talked about market maker. So market maker plays a very crucial role, who creates the liquidity. If an investor is coming in for the buy side or the sell side, the order will get executed because of the presence of such market makers.
And this is a market that's growing at what now 20-30%. So definitely depth should come in as we move along. Swaroop, or before that, let me actually get Siddharth in again. Would fund of funds, Siddharth, be an attractive way of making investments into ETFs?
So till now, typically it's the ETF or the index funds which are being used to take passive exposure in the market. But now we feel that fund of fund is also a very interesting structure to take that exposure. So, for example, a fund of fund can be structured in a way to provide investors exposure to multiple ETFs. So, for example, a fund of fund can be created where that particular fund is investing in a Nifty 50 and a Next 50 and a mid cap ETF, and the end investor is getting a broader exposure to the entire large and mid cap space. Now, it addresses multiple things which we talked earlier. Since ETF per se is of very low cost, due to SEBI regulations, the fund of fund will also remain very low cost. And in last couple of years, the taxation also has changed for fund of fund. So earlier, while it was debt taxation which applied to fund of fund, which at times made it not that appealing to the investors. Now, if a fund of fund is investing in ETF more than 90%, then the equity taxation applies, which makes it more appealing now. Also, one very interesting thing why, in terms of cost, also such fund of fund can make sense is if an investor is going ahead and buying ETF through his broking platform, he'll be paying some broking charges and other charges while transacting in an ETF. All those things will not come into picture once you're buying or rather investing in ETFs through a fund of fund route. So we feel that now, due to the equity taxation being applicable, the low cost of ETF, the convenience of taking exposure in multiple ETFs through a single fund, I think fund of fund will make more and more sense, and we are already seeing a couple of fund of fund in the market which does that, and we feel that this particular segment will grow more and more, where the fund of fund is providing you exposure through ETF to the passive investments.
Okay, Swaroop, you want to come in?
Yeah, Sumera, see, I mean, when you look at investing, two factors to investing. One is to decide where to invest, and mostly that is the easier part. People don't realize or make money because the discipline part comes in. And that's where, when we are asked whether this is the future, active or passive, they could be vehicles, but the future lies in solutions which will cater to investors. And one such solution is the fund of fund format. What it does is that, two things it does. One, obviously, it gives you the exposure of various sides of the market or the length or the breadth of the market through its underlying exposure. And Siddharth sort of laid down the basic structure. But the other part, two things which are not generally discussed much, is the power of rebalancing, which is left to more a mathematical formula which a fund of fund brings. I think wealth creation is created by discipline, which is talked about, some part which is talked about, which is compounding. But the one which is not talked about is the power of rebalancing of a portfolio at a periodic level, which the fund of fund sort of attempts to do, and that I think goes unrecognized in times. And I think the future to investing lies in such structure. And I'm a big fan of fund investing because the capability of being disciplined then becomes mathematical, as you rightly pointed out in one of the questions, that the human factor goes out, and it definitely does not fall to emotions or market movement. And that's the power of a fund of funds. So the power is in the discipline that it brings to the table, and the power it brings because of the exposure to the length and breadth of the market. The combination of the two definitely makes it a good proposition for all types of investors.
Well, that's true, actually. And what's testimony to this is the fact that the number of ETFs worldwide have actually doubled in just the last 6 years alone. Siddharth, Swaroop, thanks very much for joining in and for breaking down the world of ETFs for us one step at a time. Thanks very much for watching this webinar on moneycontrol.com.
Mutual fund investments are subject to market risks. Read all the scheme-related documents carefully.